I'm Scott Hess, tax and business consultant.
I'm John Barton, small business owner. Remember the tortoise and the hare? Slow and steady wins the race.
We started Turtlesmith to help people start small businesses, providing information and resources to small business owners and entrepreneurs.
Build a solid foundation and forge your dreams.
Well, hey, thanks for being here today. We really appreciate you coming in. And I'm excited to learn about business banking and what all you do for small businesses.
Yeah, well, thanks for having me. Glad to be here.
Yeah. Well, can you start off with just telling us a little bit about your background, kind of work and education, and what led you into banking?
Yeah, well, my work career really started right after high school. I joined the National Guard. Thought it would be a good way to get my college paid for, and that brought me into East Central. And after 2 semesters there, my Guard unit got activated to a stateside mission here. And so I had to leave college. And after that deployment, it was kind of in between semesters and really trying to figure out what I was going to do. And at that point, my uncle, he worked for City Financial. It was a consumer loan company that was able to get me a job, and started there and was able to make a career with them for 10 years and learned how the consumer side of lending works and what all goes into that. And eventually that led to a job opportunity with Automotive Finance Corporation, or they go by AFC for short. And they're what you call a floor plan lender, which is short-term lending to secure inventory for car dealers. And thought that was a pretty interesting thing, and took that opportunity and went on to work there for 12 years before another opportunity came open at Bank of Oklahoma. And I'm now here doing business banking, getting to work with small and medium-sized businesses, where we bring them the right deposit account or any of the treasury or merchant services they need to be successful. And really enjoyed that transition. But every one of those previous stops, they kind of led to where this opportunity became available to me, and it's been a good fit so far.
Okay. Well, I was looking up before this interview a little bit about floor plan lending. I was unfamiliar with it, and I guess that's how these independent car dealers, that's how they get started, is with a floor plan.
Yeah, it is common. Whether it's a brand new dealer just starting out, or even more of your experienced operators, they're going to have this line of credit that lets them go to the auction, acquire the inventory they need for short-term financing. My company at that time, AFC, they pay the auction for the purchase, and the car dealer gets to bring the car back and get it reconditioned, ready for sale, get it onto their lot. Once they sell it to a consumer, that's when they pay the floor plan back, the principal plus the fees and interests. So that really allows the car dealer to acquire the inventory that they need without having to come out of pocket. It also provides some other services, such as the insurance, why the vehicle's on the lot, gives them access to that type of protection. Also, the online portal to manage their inventory and their cash flow and their turn time. Really try to be a full support for the dealer to be as successful as they can. So
really the floor plan just kind of has everything you need all in one. It has the insurance, the financing for the car. Pretty easy to get started. I think we were talking a little before this that it's not very many requirements to get a car dealership open.
That's right. To be a car dealer in Oklahoma, it's a pretty easable task. I mean, if you have don't have a criminal record, you're an Oklahoma resident, you can get the $25,000 bond. You have a facility that meets the requirements. At that point, you can be a car dealer.
Really?
And
that's unbelievable.
And then, there's going to be several floor plan companies. There's multiple ones here in the market that will work with a brand new business owner. So, being in business banking now, you'll find that it's really hard to get any type of lending as a startup.
It can be, very difficult.
Exactly. Most of these lenders, they want 2 years of tax return history. And it's the whole chicken and egg. how do you get the chicken without the egg? You know, you need the capital, and that's what's cool about a floor plan is that they will. They're going to come in day one. I mean, the day a guy gets a license, they could get a floor plan set up for him, and you know whether that's a $50,000 line of credit or several $100,000. They're going to be able to go to the auction that week, acquire the inventory they need, stock their lot, and be up for business. So,
kind of the downside to those floor plans, though, are real high financing fees. I mean, up to 30%. Is that right?
It can be in certain situations. So, you know, something that a good floor plan manager should be working with the dealer to make sure that they have a turn time that is not going to leave all their profits on the table. Because if you take on this inventory and you're not able to move it in a reasonable amount of time, all your money's going to the floor plan.
Right.
So that turn time from the day they buy it to the day they sell it is critical, and whether that dealership's going to be successful. So it's something that the lender's going to watch. If a dealer has a really healthy turn time, let's say less than 60 days, the floor plan lender is going to know that, and they're going to be more inclined to give that dealer a line increase or temporary increase, or it's going to show the signs of a really healthy dealership.
Yeah.
So when that's not the case, those are typically the ones that are going to have a bad experience with the floor plan and may not be in business very long.
So you say a good turn time for a car dealer is from auction to selling to the customers, 60 days?
I think that's going to fit for most retail operations. I mean, every business model is unique. Maybe you're a wholesaler and it's a totally different environment where you're moving that inventory in less than 30 days because you're going from dealer to dealer. Maybe you have a really streamlined retail operation where, there's maybe only 10 cars out there and you're selling 10 cars a month. That
just churning through inventory.
Yeah, absolutely. Yeah. But, if you think of a larger dealership, I would think in most of those cases, they're going to want to be 60 days or less. That's a pretty healthy turn.
So in your experience dealing with some of these companies, and I'm sure you've seen good ones and I'm sure you've seen some real bad ones. Is there anything that separates a successful car dealership, a habit, a system, something that really makes a company better, either from a lending perspective or just in operations? Yeah,
that's a great question. And, I mentioned how easy it is to get started in this business. And, I think there's some operators that come in and think, hey, I love cars. I can sell cars. This is going to be easy business for me. Yeah. And they maybe don't have the same grit and hustle that others might have. But I think the ones that are successful, they approach it They recognize the challenge for what it is. It's not an easy business. You're not going to just walk in and be successful overnight. There's lots of competition, but you know what? If you do it right, you can be successful. You can make a really good living, and coming in with that just hustle, making sure that you're. We talked about turn time, that you're moving the inventory as quick as you can. That you try to. Create revenue at every stage of the dealership, whether it's maybe at wholesaling or your back end profit, which is, offering warranties and financing. Being able to move the inventory and then collect revenue in all these different channels, and then just having the grit and desire to get out there and do it. Those are going to be the ones that are going to be most successful.
You mentioned financing. I see those like buy here, pay here places. Are those using a floor plan too, and then they pay them back slowly, or are they actually financing in-house? Is that how that works?
So those are going to be less common, because a lot of a floor plan lender is not going to typically finance the receivables like on a buy here, pay here. Right. So if you're wanting to do a buy here, pay here, the floor plan is usually going to want to be paid off as soon as that sale's made. And then if you want to carry the note in-house, that's between you and your customer.
Gotcha.
However, there are some revolving lenders out there where you can finance your receivables. But, that you're going to have a very bankable type deal at that point with, financials and have a balance sheet that can support that. So those lending arrangements are out there, maybe not as common. It takes deep pockets to be a buy here, pay here dealer.
Yeah, fair. That's what I thought. I was just curious about. All right, one more question on the auto stuff before we move on is there's kind of that stereotype that you got to be a used car salesman type scummy person. Do you find that's true or working with these? Or I feel like most of them are decent people.
Yeah.
There's just a few bad apples ruining the bunch.
And what we got have these bad apples in every industry.
Yeah, of course.
They are there. And, but no, I mean, some of, I had many relationships that were, some of the best people, really. I mean, these are, when we talk about the entrepreneurial dream in America, a lot of these guys, they represent it more than just anybody else I've met. I mean, they're coming here, they're wanting to build a business, they're wanting to be successful, and they put in the work to do it. And most of them do it in an honest, integrity way. Now, I mean, as we said, there's bad apples out there, but I was proud to be a part of that industry, and I still look back on it favorably.
Fair enough. Right on. Well, so now you've transferred into kind of small business advisory role at Bank of Oklahoma.
Business banking, yeah.
What are kind of some of the first things a small business should be doing or working with you, or what are kind of the first steps of a small business starting out?
Yeah. Well, so the small business, you may be a one man or lady shop, or maybe you have a few employees. Regardless, you need to have a good team around you. Obviously, I'm a banker, and I think I'm a critical part on that team. But there's some other members out there that can make that journey much more pleasant. A good bookkeeper, somebody that can help with tax preparation and guidance there. One thing I've learned is the bookkeeper can be one of the most important quarterbacks there, because they can guide on planning. They can do introductions, whether it's a business banker or another vendor. I think having a good bookkeeper, a good banker, if you get those two things, you're going to be in a better position than most.
I completely agree. I recommend to all my clients, find a banker you like, find an accountant you like, and find an insurance agent you like. All of people you know.
Yes.
So.
Yep. And the insurance is the third wheel there.
Yeah.
So thanks for bringing that up.
Yeah. So I harp on this a lot, but I'd like to hear your point of view from the banking side. I scream at my clients to completely separate their personal and business expenses. We deal with something called piercing the corporate veil, where you get sued, your LLC becomes invalid. What are your thoughts on that? Well,
I've heard the piercing the corporate veil, and that was in my floor plan business.
Yeah.
And so absolutely, I mean, if I'm your lender and I'm going through the bank statements and I see we had $150 at Fire Lake, we have your personal expenses coming out. I mean, your lender sees these things, and it absolutely is going to question the integrity of the overall books there. Commingling the funds, there's just really no reason for it. Whatever size of business you are, I mean, if from the small to doing 7 figures in revenue, I mean, don't commingle the funds. Keep business and personal. Your bookkeeper and tax accountant will appreciate that.
Yeah, very much so.
So
very much so.
And then if you want to be able to know the health of your business, right? And how can you do that when you have all this different noise involved in the financials? So don't make it more complicated than it has to be. 2 bank accounts, that's easy enough.
Yeah, it's not that hard. I don't understand. And I always get clients who come in and it's just, you're right, all the casinos, Fire Lake Casino, Cherokee, all of them are just there. And I'm like, you got to stop that. Just transfer the money to your personal account and then take it out.
Absolutely. Exactly.
Yeah.
You think about what's happened over the last few years. If you're fortunate enough to own your home, it's appreciated.
Right.
The value's gone up. You got a good interest rate on that first mortgage. So you're sitting with all this untapped equity. Very common for a business owner to maybe start there. But, as we think about as that business grows, I mean, your balance sheet's important. We talk about not commingling the personal and the business funds.
Yeah.
Same on the assets too. I mean, you want a clean balance sheet. So that may have been a necessary evil at one point to get started. You tap in your home equity line of credit. But, I recently did a loan where that was the case, and we moved it over to a term loan they wanted the business debt structured correctly on the balance sheet. The business was growing, and, it's just kind of that next level up.
So that is kind of a common theme for startups. Then they'll do a small loan on their house or a HELOC, and then it converts into a proper business loan once they've got some success under their belt.
Absolutely. Yep. And as I mentioned, just did one here this month, that exact same scenario.
So when you're looking at a business, whether they're just starting up or they've been in business for a little while, is there something that you're looking for? I know you said a little bit about the cash flow being able to support the loan. Is there anything else you're looking for? Do you look at a business plan? Do you look at potential growth, or does that just not factor really anymore?
I think one thing I've learned is that all these banks, they have preferred industries that maybe they fit in better with, right? So they're definitely taking a look at the business plan and the industry type you're in. But for me as the banker, though, I absolutely would love to look at a business plan because for me, I put a high value on the relationship side, and for me to truly support your business and the goals that you have, I need to know you. I need to know what your goal, your dream is. What are we trying to build here? What direction are you going to go? Because when I have those type of plans, I can start formulating my solutions to match those.
Okay.
So, while maybe the business plan it is a requirement for an SBA loan, but a typical conventional loan, your underwriter may not want to see a business plan. But I, as your banker, I do.
Yeah. Okay. When you have a business plan, and banks, I think after the banking crisis, right, they're really just looking at numbers. Like, I think they used to do a thing called, was it like manual mortgages, where they really looked at stuff? That's not really a thing anymore, right?
Well, so higher you get up, there's some room for discretionary lending,
right,
where we can, look at different factors here and say, hey, this is a good loan, we need to do it. Often, though, in business banking, or where I'm at in small business banking, it needs to fit in the box. There's a scorecard that's going to work for it, and so really working with your banker, if you come to me for a lending that I can't do today, I mean, a no today is not a no forever. So
right,
as your banker, I want to be able to say, can't do it today, but if we could get to X, Y, Z, you're going to be in a much better place to get an approval here. Okay. So I think that's important.
Getting a banker on your team seems to be important.
It is, because the no is nothing to be afraid of, because if you have the right banker, they're going to put a plan together to make sure you can get where you need to be.
Okay. Well, let's talk a little bit about cash flow. Cash flow is such a challenge, and I know that that's one of the primary factors in whether you're getting a loan. So do you have any strategies that you can help kind of recommend for small businesses, how they can show better cash flow for you? Or is it really just at the end of the day, the numbers are what they are?
Numbers are the numbers, but I think having goes back to the CPA, making sure that we're, reporting revenue correctly, that we're accounting for everything. And at the end, a lender does not want to put a borrower in a situation where they can't repay the debt. That doesn't do anybody any good. So ultimately, just making sure that the cash flow is supported on the tax return. If there's enough money to service the debt, a loan can be made. And if not, to your point, the numbers are the numbers. So, but having that conversation, a plan can be put into place to get you there.
So, is there a time that businesses can look for where it seems good to take on financing versus just reinvesting all their profits? I talk to my clients a lot about, we need to balance some debt with some profit, not just putting it all back. And I think people get afraid of debt sometimes, and I don't think that should be the case.
Yeah. I think there's two schools of thought here. I mean, I think about me as personally, right? I don't want to have debt. right? We've all heard of Dave Ramsey, right? I mean, I follow a lot of those principles personally. But at the same time, though, I think when we talk about a business, there can be good debt for the business.
I agree.
I think if you look at what can you get, what type of return can you get on this debt? Was with the business earlier today, and they had a pretty sizable account that they had in a CD. It was just redoing, and the question was, hey, here's the return I'm getting on here. Can I go pay off some debt? What is your rate of return on your current investment? How much is the interest going to be?
Yeah,
and then you can do a pretty quick cost benefit analysis. Hey, is your cash better used on making the purchase, or maybe it's taken on the debt? So I think on the business side, what are you going to gain from that debt? If it's a new vehicle that's going to allow your company to increase revenue significantly, who cares if you're paying 6% interest? I mean, if
it's earning more,
yeah, absolutely. So I think look at the numbers, let the cost benefit analysis happen, and don't be afraid of it.
Fair enough. So how does financing kind of differ between real estate, equipment, certain things? I know real estate you have to have for most conventional loans. If you're buying a business, it has to be 20% down, 25%.
Yeah, 20% is what we're going to look on a conventional.
And equipment, you can do a little less sometimes, right? I've seen 100% financing for equipment.
Absolutely. I think, what they're going to look at equipment is this a long life piece of equipment? So, I mean, if we're talking about, a forklift that easily has a decade worth of life on it, and it's a brand new or fairly new equipment, I mean, I think most lenders are going to be really inclined to give you 100% of that, right? Now, on the commercial real estate, they're going to want 20% down. I mean, 80% loan to value is kind of the norm there. So you are going to have some cash at closing to make that deal happen.
Are there any options for real estate financing for small businesses? Like, they have the FHA loan for housing, or is it just conventional loans? That's all that's available?
Well, SBA is going to be available there too. Yeah. And that can get the down as low as 10%. But
really? Okay.
Yeah, so there are some SBA lending there at 10%, but a conventional loan for us is going to be 20%.
Are there any common mistakes or pitfalls that clients face when they're trying to do a business purchase, like a real estate or equipment purchase, or is it all pretty straightforward?
So when we talk about a real estate loan, there's a lot more due diligence that's going to go involved in this. If you come to me for a truck or equipment loan, we're going to have you approved and funded within that week, right? That real estate loan, we're going to need an appraisal. We're going to need to do title work. We're also going to be doing some environmental surveys, which is going to be a lot different if you've only bought a house like a residential and you've never done a commercial piece of real estate. That the environmental may be a whole new piece for you, and there's a lot that goes into that. And story here locally, just on this street, just a few buildings down, we were in the process of doing a commercial real estate loan, and the environmental study came back that 50 years ago that was a dry cleaner was in this property, right?
Okay.
And dry cleaners are known to have pollutants that will seep into the soil. And this was there for a long time. And so that phase one found that elevated risks. So a phase two was required, which is upwards of $10,000 that was going to be out of pocket for somebody to come do boreholes into the ground and do a soil sample to make sure that the contamination hadn't seeped there. Now, that could be frustrating as the client there, but ultimately, though, the bank is there to help protect everybody. We don't want the client to get in a situation where they buy a piece of property where they're legally liable for environmental hazards that happen well before them, right? And the bank doesn't want to lend on a property that's potentially contaminated. So, and if this sounds like just this is a fairly common thing. This is going to be a regular piece in commercial real estate.
Yeah, that's interesting. If somebody were to buy a piece of property and then they found out like 2 years later that there was some kind of contamination, are they then responsible for it, the new owner?
Yeah, absolutely. So most banks are going to require this environmental due diligence. Earlier this year, I had a client come to me, wanted to refinance a building that he had already purchased. A small lender had set this up for him. There was never any conversation about environmental study. came to me to refinance. We did our phase one, as I just described. We found out in the 80s this was an oil lube shop, and there was oil tanks still in the ground, right?
Oh, my, he didn't even know.
He had no clue. He did not know he was in any type of liability here for this. Once we, kind of said, hey, this is what we're going to need to finish this thing off, there wasn't a deal to be made. But I like to think that bank really did him a disservice there, because
for sure.
Yeah, I mean, it could look, hey, it was easy. I didn't have to pay these fees. They got the closing done so much quicker. But you know what? I mean, now he is in a situation where if there was contaminants and it happens on the adjacent property, absolutely, they could come back on him. So it goes back to having the right partners there that are, keeping everybody's best interest, not just trying to close a deal, right?
Yeah. Well, so how are interest rates doing now? Are we going up? Are we going down? What's happening in the future here?
$1 million question, right? We did see a 0.25% drop just here in the last week, and from what I've read, it seems like the one in December is a little uncertain. As far as the commercial real estate loans, I think you're still going to see a lot in the mid-6 areas, for the right FICO. So. I think historically those aren't terrible. They're not the rates that we saw just a few years ago, but
yeah, everybody's still talking about 2% or 3%. It's just not a thing for a while, probably, is it? It's going to be at 6 or 7 for next few years, you think?
Yeah, well, I all we have is history to judge off of, and we have 50, 60, 70 years of data here where this is about where rates are. Yeah, we may see some decreases here in the coming year, but you know what? You can't sit on the fence forever. And if you're waiting for that 3% rate and you got a growing business and you need to get that facility, at some point you just got to get out there and do it.
You just got to go for it. Mm-hmm. How hard is it to do a refinance on commercial stuff? Is it pretty similar to home lending and stuff? So even if you get locked into a 6% now, down the line, if it goes down, it's easy enough to get moved?
I think it's not uncommon to have some prepayment penalties on these loans. Typically, those are going to be less than 5 years. So if you did have one of these COVID type rates,
right.
You're probably past that point where you have to worry about a prepayment penalty. But no, it is pretty simple. I mean, we're going to want to do another appraisal on the property, but that's probably appreciated. We're still going to check cash flow to make sure you can support the debt. Still want to see the business and personal credit to support that. But if we can check those boxes, you should have a pretty seamless closing.
So do you have any financial habits personally that you feel like more small business owners need to know? As a banker, I assume that you have good finances, but I don't know. As an accountant, my books are the worst. So kind of like the old car mechanic, their car is the worst. So
that's right.
I don't know.
I would say the best thing most business owners I know, they wake up in the morning, they check their bank account. They check their bank account when they go to bed at night, right?
Yeah.
It's the cash flow. That's the life of your business. And I try to follow the same personally. The whole budget, it can sound like a dirty word sometimes, but it's just knowing where your money's at, knowing what your money's doing. You're the boss of your money. You tell it where to go work at. And so I think don't put your head in the sand like an ostrich, right?
Mm-hmm.
Know what your accounts are, know what's coming in, what's going out. I think if you can answer those questions, you're probably ahead of most.
Do you have any advice for small business owners on anything they could do to look better for the bank, or is it just kind of work with your accountant, try to get everything moving?
Yeah, having the proper financials, right? That's where your CPA comes in. We've talked a lot today about having relationships with people that can support your business, the insurance agent, the bookkeeper, the CPA, the banker. I heard somebody say something recently like, hey, do you know your banker's name? Does your banker know your name? If you can't answer yes to both those, then you don't have a banker, right?
Yeah.
And I think that probably goes with some of those other support functions for the business too. So relationships are what makes business work. having the right relationships, people that you can count on when times are good or when they're not good. That's the whole point of having a relationship. When these things happen, I got somebody I can call. They're going to listen to me, and they're going to try to help me solve the problem. So I think that's the most critical thing you can have is find people you can work with in that manner.
I have a lot of clients who like to work with multiple different banks. What are your thoughts on that? Do you like clients that are they're your clients, they just bank with you, or do you feel like spreading the risk out amongst multiple banks is maybe beneficial?
Well, yeah. So if you're a client of mine, maybe I have this one little loan that we've done, and there's a whole nother relationship out there that I'm going to try to earn that relationship, and I do want that all to come here with me. At the same time, I'm not going to take personal offense to it. The guy has multiple accounts out there, so I say let the best man or woman win. I try to deliver that as a business banker, where at the end of the day, you say, hey, you know what, it doesn't make sense to have all these relationships. I want to be with you. For me, I figure that will happen if I've earned it, and until there, I'm fine with the fight to get it.
Okay, what's a good success story from you personally? Is there any time when some financing or a real story where banking and the relationship with bankers really helped a company succeed? Or
yeah. This may not be the most grandest story here, but I mean, it's a story that I think really answers your question. And there's an electrician here in town working with another bank. He's been there for a long time. He needed 3 vans, growing business, time to upgrade the fleet. He had put in a couple calls. His banker had left that he was working with, didn't know where he went. Nobody could tell him. He called the local branch, got passed around. A week and a half go by, and he hasn't even been able to submit the application. He's incredibly frustrated. Lucky enough, he calls Bank of Oklahoma next. I'm able to get on the phone, hear his story. We set up. I meet him that day for lunch. We come. I hear his story, hear about what's going on. It's a great business that he's built. He's at an exciting chapter. I was like, I'll gladly take these van loans for you. We'll get you funded, and we had him had him with the loan 2 days later. He had the vans by Friday, delivered from Dallas. He sent me a picture just last week. He got them all wrapped up, with his marketing stuff on there. I had a lot of pride here, right? Because this is a guy that had a good business. It was just a small shop. He's at this spot where he's able to grow, get 3 new vans, get his branding all over it. That's business banking, right? Working with these guys to have the entrepreneurial dream, and how can we fuel it? And I felt like I did that, and it was through a relationship. I know what he needs. I know what he's looking for here next year. I always like to find out, hey, what's the plans after this? And so we're going to keep building on this thing. And it all started with just taking the phone call.
That's really what it's about. Just showing up, building that relationship. So looking ahead, do you see any trends in the banking industry that people should be aware of? Anything coming down the pipeline? Any AI going to change the landscape of banking?
Oh man, I had an excellent class last week on AI. Matt Stefani, somebody with our bank here, they had a presentation on the rise of AI, and I'm somebody that's followed this, and I've been like everybody concerned. What does the future hold? I mean, am I going to be out of a job, or are robots going to be replacing me? And I tell you, when I left this last week, the amount of confidence and just bullishness I have on America and where we stand with this AI revolution, we're poised to win this thing. And I really believe that after getting to talk to Matt on this. And there's so much investment going on, right? We talk about all the capital projects and the manufacturing that's coming back here. There's so much money coming in. The economy is going to be booming for a while, and I
that's
think
good to hear.
I really think the next several years is going to be good growth. I mean, that's my one little banker's opinion here, but yeah, no, I'm excited about the future. I think the next several years could have a lot of opportunity for us. And then when we even look at it locally, I mean, all the exciting stuff happening here in Oklahoma City, continue to grow and what we're bringing in business wise. So I think it's an exciting time to be here and be in business.
Yeah, Oklahoma City is growing. What are your thoughts on this huge building they're going to put downtown? The monstrosity of 100 stories or something. I don't know about all that.
We'll see if it gets built. You
think it will?
I don't know if it's 100 stories, but it's cool to see that headline popping up online and through a whole bunch of other markets.
Tallest
and stuff.
story
So
in Oklahoma. It's tallest building in America is going to be here.
Yeah, if anything, it's getting people talking about Oklahoma City,
which is always a good thing.
All press is good press. So.
Absolutely. Well, one last question for you. If you could kind of leave our audience or viewers with one thing, what would it be? What's a good financial management, or why should they work with a small business advisor, business banker? Anything else we haven't touched on?
Yeah, I think having an honest, transparent conversation with the people that you can trust, whether that's your family, your business partners, your financial advisors, the team that we talked about. Being honest, being humble, seeking advice where you need it, and just getting out there and doing it. I mean, we talked about. There's a lot of fear in being a business owner, getting started.
It's terrifying.
It is, and you know what? Hey, the people that do it, they're not any smarter or better than us here. No, they just had the gall to go out there and do it. And
I've always thought just they were mostly delusional and just went for it.
Yeah, right. Yeah, it's a beautiful delusional. Where they take that risk and So I'd say don't be afraid of the challenge. Whether you succeed or not, it's important to go out there and do it and have the people with you that you trust.
Well, I agree on the point that you've hit on several times, is that you just have to build the right team. And I think a banker is instrumental at all stages. Even if you don't need a loan right away, you should at least know somebody who can help you out. You got to have a guy for it. So.
Absolutely.
Well, thank you so much, man, for coming on. We really appreciate it. I learned a lot. I didn't know about floor plan lending and that stuff. So, Bank of Oklahoma, people can find you.
Yep. Matt Ramsey, Bank of Oklahoma. I cover the Oklahoma City market, work with small, medium-sized businesses, and I'm happy just to have a conversation. It doesn't have to be a lending need today, but we've talked about the relationship so much. Let's start having one and go from there.
That's great. Great. Well, appreciate having you on. I got to say that right.
Well, thank you.
All right.
This is always annoying to ask, but if you're liking this content, please like and subscribe. It's the best way for us to get more followers and more people engaged in this great business content. You can also follow us on all socials at Turtlesmith OK and find us at turtlesmith.com.